The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien.
Good morning, folks. Not the voice of Tommy O'Brien. This is Steve Rhodes filling in for him. We are live here at 9:06 a.m. on the last trading Friday of the calendar year 2024 out there. So would love to hear from you if you've got some requests. You can send me an email. Send it off to Steve at TFNN.com. Inside that subject heading, please put radio show question. And, of course, if you're inside our Tigers demo, any and every ping will do. So good to be back with you. Boy, it was decades ago when I used to do the 9 to 11 o'clock time frame out there. So always good to be back in the seat here before the market opens. So right now we've got the U.S. equity futures, as you can see, trading to the downside. You've got the ES mini trading down 31 points at 60.64. We've got the NQ trading down 125 points, about 0.5%. Everything down about 0.5% out there. The Russell's down 14 points, 215. For the E-mini Dow. If we take a look at what went on over in across the globe last night, you had a mixed bag in Asia. The Nikkei, though, is breaking out. We'll take a look at that and where that is likely headed to. Is up 713 points last night. That was a 2% move. Right now over in Europe, we've got a mixed market. You got the FTSE down 9. The DAX is up to 72 points. We'll go figure out what that means as well. We take a look at metal futures. You got gold down 23. Silver's down 43 cents. That's 0.8 and 1.5% respectively. Copper's down just slightly. You've got natural gas that's up by 10 pennies. So I got the right count. Yeah. And light sweet crude is up 80 cents. He's trading out at 70.42. 30-year Treasury, both 30-year and the 10-year note are trading to the downside. 30-year Treasury's up nearly about 0.5 point at 113.17. 10-year note printing out at 108.18. That U.S. dollar index trading back 17 pennies right now at 107.71. We're going to take a look at the U.S. dollar index as well. So let's just kind of begin our morning seeing what's really going on across the globe, other than take a look at the numbers, taking a look at the chart. So let's begin our day. Take a look at what went on overnight across the globe. We'll begin with the Shanghai index. That's in your left-hand side right now. We take a look at the Shanghai. We just open up the chart. It's got a TD9 count top, as you can see. Price moved lower. Not that we've got any kind of a bottom pattern, if you will, but we have rallied. It did rally right up into its oscillator and change line at 35.81. Now, something you kind of might want to note as we take a look at the charts is how many of the indices that we look at have rallied right up into potential resistance. In this case here, that oscillator and change line. Now, if price were to close above 35.81 on Monday, then price would likely go target that TD9 count top that formed out here on December the 12th. But right now, price found resistance. Could be signaling to an eye that the Shanghai is getting ready to go head down towards its breakout level. That was at the 34.48 area. Let's go take a look at the next market, the Hang Seng. What do we have going on in the Hang Seng? The Hang Seng formed that nice little TD9 count top out there. I mean, when I say nice little, it was kind of nice big, right? If we take a look at that trading session here on December the 10th, big move to the upside. You gapped up and then just continued to trade lower. TD9 count pattern is still in place out here, but in this instance, the Hang Seng is trading above that green oscillator and change line. So its signal is somewhat neutralized at this moment in time. Price is likely to at least target the low of that TD9 count bottom pattern. The December 10th low is really what I'm referring to at the 23.08 level out there. So likely that's going to rally, whereas the Shanghai may have petered out, so to speak, by running into resistance. It's the Nikkei that I mentioned that is breaking out. It's breaking out of a consolidation pattern. Let me pull this chart back here. A moment. Lord. So we can see that this has been trading in a sideways pattern since really about the September timeframe out there. And today we broke out of that pattern. Now, this gives us a couple of different options to. So when you break out of a consolidation, you typically do a measured move that's equal to or greater than a consolidation. So I'll just move that to the upside. So this is suggesting to you and I that the Nikkei wants to get back to its all-time high. Now, this is interesting. When it did form its all-time high was back on July 11th of 2024, and it formed a nice island top candle candle formation. So you always want to pay attention to those island tops and island bottoms. Those are the most bullish or bearish set of candlestick patterns that I know of out there, and certainly that one that one did its job out there. So price has resistance at 41,520, but it very likely with that consolidation pattern may be able to bust out above that level. So the Nikkei is headed higher, or should head higher out there. We take a look at what's going on over in Europe right now. Boy, these charts are just a tad messed up. We can see as we take a look at the FTSE, you can see that it continues. It has a little descending trend line, so everything's rallied up into that. That's not what we're looking at right now, but that was clearly a topping area. And price pulled back to test its breakout level support at 80.52. So the move to the downside inside the FTSE has already completed, and that it's held. Price may be rallying into its oscillator and change line. That's at 81.84 at the present time. We take a look at the DAX out here. The DAX had formed a kind of top do we have out here? Well, we've got a Rhodes momentum indicator top. That didn't confirm until we had this gap to the downside. So what do we say? What is the DAX likely to do? Is the DAX getting ready to head lower? We've got a little bit of a rally. We are trading above, was it open? December 23rd, sorry. The DAX was closed yesterday. And at this stage here, as long as price remains above last Wednesday's high out there, that's at 19,901.32. You could easily get a rally up into its oscillator and change line as well at the 22.18. We don't have any kind of a bottom pattern out there. This would be really day number one to the upside for it. So maybe just get a 2 to 4 day rally inside of the DAX out there. So that's what's going on across the globe. Let's go ahead and close out these charts here. Give me a moment. Let's close this out, and let's go take a look at what's going on. Well, let's take a look at soft commodities. I don't get to do this too often during the Trader's Edge show. We take a look at soft commodities. For those of you that trade them, you do have a nice Rhodes momentum indicator bottom that is formed inside of the wheat contract, the March wheat contract. It's trading with inside its profile, and that has supported 532.95 and resists the 562.55. I say odds are favored that price is going to rally, wheat that is, up in the 562 area. We take a look at the soybeans out here. Let me open this up here, and then soybeans has a what? I don't really have a bottom pattern out here. We just simply have soybeans trading with inside their bearish structured profile, and that's trading into the sell zone right now. That sell zone is between the levels of 994 and 1,006 out there. Now, price could close above 1,006. You've got additional resistance at the 1024.50 level out there, but I don't have a bottoming pattern. In the case of corn is setting up an A to B equals CD pattern. It's confirming that this morning. Let me just go ahead and we can draw that in here. Oops, I'm going to do that. Let's draw in that pattern. We'll just simply go to Stevie's line tool. We'll just simply draw in the A to B point. You can see it had a nice Rhodes momentum indicator bottom pattern back in the August time frame. It tops out with the TD9 count top. Now we're just simply going to take a look at the TD9 count bottom that formed out there back on the trading day of October 17. So we are trading above that TD9 count top, where we closed above it yesterday. The high was at 452.25. Right now we're trading at 453.25. So the A to B equals CD pattern likely to be completed, at least get up to that one-to-one price projection, the 462 level out there. So the price of corn looks like it wants to get higher. If we take a look at coffee futures formed a TD9 count top way back here on the trading session of November 29th. That top has held, and we just have a consolidation with inside its profile. Coffee consolidated between 316.63 and 334.25. If we take a look at sugar out here, sugar formed a TD9 count bottom pattern yesterday. Yes, there's an A to B equals CD pattern in place out there. We don't have a bullish reversal candle yet. We don't have to worry about that pattern because we've already got a TD9 count bottom that went ahead and completed yesterday. Hey, Steve Rhodes with TFNN filling in for Tommy O'Brien in the Morning Market Kickoff. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Steve Rhodes filling in for Tommy O'Brien this morning. Notice some comments about white light inside the Tiger's Den. And I don't know if Tommy shared this story with you about Tom's, where did Tom really come up with the conviction with regard to white light out there? And so I'll just tell the story here briefly because it's from most of our belief systems come from actual things that have occurred in our life, and that's the case with Tom as well. When he was a teenager. And I had asked Tommy about this, while we were celebrating his life at the funeral, and because I knew the story, but I couldn't remember all the particulars. And Tommy was able to just fill that in. And that's this portion, which was when he was about a teenager, 13, 14, 15. He and his best friend, his buddy, were out shooting BB guns. And his buddy accidentally shot him. I guess he was maybe a Cheney guy. But anyway, shot him in the eye. And I don't recall which eye, but let's just say for this purpose, it was his right eye that was shot in, and it was close to going blind at that stage. And so the doctor had told him that this possibly could somehow move into his other eye as well. And what his doctor said is, I want you to put up this wall. I want you to just think about a wall, that's inside, your forehead, inside your head out there, and it's just blocking the ability for that to bleed over. And so what all Tom was doing was just simply focused on white light at that stage there. And so obviously he came out fine through that incident out there, but it was a serious incident. And that's really where his conviction for white light came in. I start my show off oftentimes saying, always really saying that everything in life is happening for us, not to us. That's not necessarily something that I created out there, but it is part of my belief system. I go go back to just, and that doesn't mean that bad things don't happen, because bad things do happen. But you can take something good out of it. In fact, Tom's passing, David White's passing, for me, the way that I turned that negative, very negative thing into a positive was, the message was, hey, you better just keep on top of your health out there. And so I've done that. I mean, since Tom's passing, I've been through the cardiologist. I've got a great checkup there, no problems. They said I'm going to die, just not of a heart attack. I've had the lungs checked out, the pulmonologist. They said, there's no embolism. There's nothing out there. Of course, I've been struggling breathing. That's a problem, but that appears to have just simply been a long COVID out there. Anyway, so that's where the white light, or at least Tom's white light story and belief system that came from. And since it was just in there, it really just kind of reminded me about that. And maybe Tommy shared that story with you. If he didn't, then that's another story that you can add. In any event, let's go take a look at the ES Mini out here. Well, actually, the daily equity future contracts. So we've got all four. These are the daily charts that are up on our screen. We had a nice, in the case of the ES Mini, the bottom panel of the screen out here shows you consecutive moves higher, consecutive moves lower out there. And markets typically move in the Texas two-step, 2 to 4 bars to the upside, 2 to 4 bars to the downside out there. We did have a nice 3-day rally. Yesterday, the ES Mini ended that 3-day rally. We could end up with a 2 to 3-day pullback out there. Nothing. Now, it could turn into something more, but at this stage here, just kind of normalcy. Now, what the ES Mini did yesterday, and this is something for us to keep an eye on for sure, is price was trading below the bottom of its bullish structure daily profile. And if a counter trend move is going to come to an end, it'll come to an end with inside that bullish structure profile as price gets in there. The top of that was at 6104 and a quarter. And actually, the high from yesterday was at 6107.50 out there. Now, we're trading back below the bottom of its bullish structured profile. We're trading below its oscillator and change line. We're trading below yesterday's low. So right now, at this moment in time at 9:22, it's just suggesting that we should head lower. We'll take a look at those intraday charts, looking for some signals out there as well. We have really a similar setup inside of the NQ. The NQ is trading below its bullish structured daily profile as well. Again, it's the sell zone. It could be either the bottom of the profile or somewhere between the bottom and that center. In the case of the NQ out there, that was at the 22,108 was the bottom. The center was at 22,222.20 out there. That's pretty cool. Nothing but twos. Had a 3-day rally. Maybe we're just looking at a 2-day decline out here. We're going to try to figure out where price might head to. If you look at the Dow Equity Future Contract, which has a TD9 count bottom pattern, that rallied right up into resistance. Now, here wasn't a bullish structured profile or anything. It was just a normal profile. It was a bearish structured profile, actually. And what price did was it found resistance right at the bottom of its profile, 43,698. So those three instruments, as we are coming into the end of the year out there, right now as we speak, what they've done, and the only one that's got a bottom pattern out here is the Dow Equity Future Contract that I've been able to identify, and price rallying right up into resistance for those three. Now, the Russell 2000 sort of has a mind of its own out there. It does not have a bottom signal that I have. Price is not now. Maybe we can say about the Russell 2000 it's weaker than the other ones. When I say weaker than the other ones, what I mean is it has not even made its way up to its oscillator and change line, which is up at the 23, 26 level. The bottom of its profile is above that at 23.44. So that's what's going on with regard to the daily equity future contracts. I'm just going to close this down. I'm keeping my resources kind of minimized right now with regard to charts and everything, because I'm going to flip back. Hector and Patty had written in, wanted to take a look at the U.S. dollar index. So to really do that, I want to use a different data feed, which is why I'm keeping things minimal. But right now, we've got the ES Mini up on our screen. So what's the ES Mini communicating to us? So the first thing I like to do is look to see where is there a clear top. Well, inside the ES Mini, the first clear top, I'm going to go from longer to shorter out here, is on the 4-hour time frame. And that top came in on Wednesday at about 2 o'clock in the December 26th. No, that was yesterday. Came at 2 o'clock in the morning. Yesterday morning, not this morning, but yesterday morning, and that was a nice TD9 count top. And then price formed a profile at 6 o'clock in the morning, and price has been trading with inside it. This is a bullish structured profile. So you've got a top here. If price is going to find support, it's going to find it inside that bullish buy zone. That buy zone is between 60.52 and 60.60 out there. If price closed below 60.52, the 4-hour time frame chart would have its sight set at 56.95 out there. So the 60.52 area, right now it's trading into a buy zone. Is that a buy? Well, if it was a buy, what we'd see is bottoming signals on the intraday charts. Do we see one on the 10-minute chart? No, we see a negated TD9 count bottom. So that says lower price. We're in bar number 8 on the 15-minute time frame chart, but it may not be until we get to a full TD9 count pattern, meaning bar 9 or the bar following bar number 9. So we've got another, let's see, this has got 5 more minutes to go on bar number 8 at night. So you're looking at, possibly by 10 that could form a bottom signal. We are in wave number 7 on the 30-minute time frame chart. Otherwise, it's negated its bottoming signals out there. That is a bottoming signal, but it needs a higher low to confirm. The 30-minute chart suggesting we might go target 60.41. The 60-minute time frame chart, it's at a key level of support, which is where price had broken out at 60.59. So this is an area to watch. The 60.59 level. You've got also on the 2-hour chart. Now, the bar that we're in right now is going to complete at 10 a.m. You're in bar number 8. This says that by 2 o'clock for that 120-minute time frame, we could see a TD9 count bottom pattern. We come back from this breakout here. Let's go take a look at the U.S. dollar index. Let's take a look at gold. We're going to look at BBAI for Dan inside the Tigers Den. Steve Rhodes filling in for Tommy O'Brien. The morning market kickoff.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Steve Rhodes filling in for Tommy O'Brien. Markets are open. You got the S&P that is trading down about 36 points. Dow's off 271. Nasdaq's down 132. Russell's off 16. Tranny's down 107. Semi's up 28 cents. Gold down $25 right now. Silver's off 39 cents. Light sweet crude up 78 pennies. Natural gas is up 7 cents. Our leaders in the clubhouse to the upside. We're led by Arcit Quantum, ARQQ, up 250 right now. You've got Tempest AI is up a couple of bucks. To the downside, Tesla leading the charge off $6. You got Microsoft that's off $3. But the market is just opening up. Let's go take a look at the U.S. dollar index, which we are. Those are the charts you should see on your screen out there. And Hector writes in, Hector and Patty, and says, can I give an update on global gold? So we'll take a look at those charts for sure, meaning how gold is trading in multiple currencies out there. But also the question is, and we'll take a look at gold just in general, where it may be headed to. And if we take a look at, and then the second question is the U.S. dollar index building cause to break down through the $99 area out there? So what I've got out here on my screen, we're taking a look at our multi-time frame chart. So the first chart we're looking at is the monthly time frame. You know, we were taking a look at one of the indices, I believe it was the Nikkei, that has that consolidation pattern. And when you break through a consolidation, which we have out here, the U.S. dollar index has been consolidating since December of 2022 out there. You can see that sideways consolidation. So a couple of years, right? It's December of 2024. And if we do close the month, the trading session, last trading session for the month is, which day is that? Is that Tuesday of next week out there? I believe that it is Tuesday. You see, Stevie's really up on top of things. Yeah, it is Tuesday of next week, so last trading day. And if the U.S. dollar index closes above, make it a little difficult there, 107.05. And we're at 107.750 right now. If price closes above 107.75, we will have a consolidation breakout. And that provides us with a measured move equal to or greater than the consolidation. So if we just simply, for our purpose right now, Hector, I'm looking at the longer term. If we just simply move that tells us what the U.S. dollar index wants to do is to get back to the high that formed back in September of 2022. So right now, the monthly chart for the U.S. dollar index is identifying a consolidation breakout. Let's go take a look at the weekly time frame chart. And on the weekly time frame chart, we have a TD9 count top, and that says that today, if the U.S. dollar index closes above 107.68. Or at 107.75 right now. So you want to watch 107.68. A close above 107.68 is going to negate that signal and tell us that we should head higher. Now, what happens if price closes below that today? Well, then the TD9 count top is still in place out there. The question is, are we above profile? Are we below profile? The top of its weekly profile for the March contract out here is at the 107.68 level as well. So we close it inside it. It's just a bit of a consolidation with inside its profiles. But if we close above that level, we'd be above profile resistance. We would negate a weekly TD9 count top, and that would suggest that we had higher. So that adds to the monthly chart that we're looking at. In order for the daily to buy into it, it's going to have to take out its recent high. Its recent high was both a TD9 count and Rhodes Momentum Indicator top that formed on the trading session of December the 20th. Now, it depends on whether or not price is able to close back above its green oscillator and change line today or not. If it does, then the signal would be neutralized. If it's not, then it says, okay, sellers, then it's lost momentum. That's the U.S. dollar index, and that it could or should head lower. Now, the retracement where it would find support, if it were to do that, Hector, would be down at the 106.89 level. So that would be the first level. I know you're talking about 99. Does the daily U.S. dollar index have a topping pattern? Absolutely. But what we can also see out here, it's really just been a sideways move. In fact, we are still trading within the candle that formed that TD9 count and Rhodes Momentum Indicator top on December 20th out there. So this could be suggesting that we get a pullback out there. Not a big deal. But at this stage here, the monthly and the weekly especially today, may be signaling and confirming what we're seeing on the monthly is a breakout to the upside. Now, if I look at these intraday charts out here, looking for some type of potential bottom signal, is there an A to B equals CD pattern on the 30-minute time frame chart? And the answer is there is. Now, that A to B equals CD pattern was confirmed with a bullish hammer candle at 7:30 this morning. If you want me to draw that pattern in, I will. I'll just simply show you that. We'll simply grab Stevie's line tool out here. We'll go from A to B, and then I'll just simply go ahead ahead and move that over to the C point out there. You'll see that actually completed. It was more than a 1-to-1 move to the downside, about 1 to 1.272. So on an intraday basis, we're looking at the U.S. dollar index that should rally up towards 107.77, 107.81. If it is able to close above 107.81, it's got 108.06 in its sights out there. That's coming from the 30-minute time frame chart. I don't see any other bottoming signals, just consolidations basically within profiles, with the exception of the 120-minute chart and the 60-minute chart right now. If I were to put up a yearly chart, so let me do this here. How can we do this? We can do it like this. Let's put up the continuous contract. Let me put this on a yearly chart out here so you can see what's going on with regard to the U.S. dollar index. Hopefully this picks up enough data for us. It'll take just a moment here for this to go ahead and calculate. And what we can see with regard, it's not all the data that we need, but what we can see here with regard to the U.S. dollar index, right? We talk about the tempo of the market, the cadence of the market, the Texas two-step, which turns into a four-step out there, the box move, the box dance. What we can see here is U.S. dollar index looks like it's going to go ahead and close above last year's high. Last year's high, by the way, was at 107.05. There's that 107.05 that keeps popping up. We're at 107.75 again. A close above last year's high is a very bullish signal. And this would just be last year was 1 year to the downside, just a 1 year move. This year we're closing above that, 1 year to the upside. We will likely make at least a 2 year move to the upside. I'd say 2 to 4 years. So the yearly chart is signaling to you and I that it wants higher price. The monthly chart is signaling a consolidation breakout, and it wants higher price. The weekly today may generate negate a TD9 count top. That would suggest that we want higher price out there. And the daily will do its thing out there. So do I think that the U.S. dollar index is headed to 99? That's not what the charts are telling us, and there's a lot of support that would have to be broken. Instead, I think that the U.S. dollar index is getting ready to head higher. Now, if we take a look at the components of the U.S. dollar index, the euro being 57.6% of its weighting, the yen being 14%, the Great British pound 12%, the Canadian loonie 9%, and then the Swiss krona and the krona and the Swiss franc out there make up the other percentages. So if we take a look at what the the euro is doing, the euro actually, give me a second here. It formed a TD9 count bottom pattern. And right now we are trading above its oscillator change line. So we may see the euro rally, into its TD9 count breakdown resistance at the 105 level. Well, if that's going to happen, as we looked at that daily time frame chart for the U.S. dollar, and it had lost its momentum, well, then that would say, okay, we're getting ready to pull back to go test support out there. So we have seen a little bit of a series of higher lows out here, and it's not unlikely. It's not out of the question for the euro to make that move, but it does have that bottom pattern in there. Of course, we know that we've got a TD9 count top for the U.S. dollar index, right? The euro basically in the U.S. dollar index making up, the majority of what we're looking at here. In the case of the Japanese yen, wants to continue to move higher out here. Well, as it does that, it is weakening. So the U.S. dollar index would be getting stronger out there. In the case of the Great British pound, it's got a TD9 count bottom, but it's struggling just to clear its oscillator and change line. Steve Rhodes with TFNN. We come back to this break. Let's go take a look at gold, BBAI, and anything else that you'd like. Steve Rhodes filling in for Tommy O'Brien. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Steve Rhodes filling in for Tommy O'Brien. I just had a system failure out there and lost a connection to my system. There we go. We've got we take a look at what's going on right now in the markets. You got the Dow trading off 146 points, S&P down 45, Nasdaq off 275, Russell's down 11, trannies are up 8 points out there, gold off $25. We're taking a look at the gold charts right now, and if we take a look at gold here, so just to give you a perspective, we're looking at longer term. I'm going to take a look at the monthly chart first. So what do we know about the monthly chart? We know that the monthly chart had a TD9 count top that formed back in July of 2024, and that was taken out immediately. That tells us about a strong upward momentum move to the upside. We don't have a topping pattern. We just have gold just kind of trading sideways to lower. That doesn't mean that gold, if it were to trade lower, couldn't trade down to the 25.46-ish area out there. This is a continuous contract that we're looking at, by the way, and that is its green oscillator and change line. So no top, price above that green oscillator. That tells us that it is bullish for the longer term time frame. The weekly has a TD9 count top. That TD9 count top went ahead and formed on November the 1st out there, and we've basically been trading lower to sideways. Now, we are trading below the bottom of its bullish structured profile. When you trade below that, its next price target to the downside would be the 25.25 level, 25.2540 to be exact. If we look at the daily time frame chart out here, what we have in the daily chart is just simply a consolidation with inside its profile. This is a relatively new profile, formed, I think, early last week out there. Well, formed on the trading day of December 20th. And that profile has support at 2613, resists up at the 2695 level. Now, we take a look at gold. I would look at the 5-hour time frame chart that has a topping pattern. It's a TD9 count top out there, and that top has now potentially found support at its breakout level at 2624.20. So that's a key area for you to watch out there. Now, if it has found support, what we should see are some bottoming signals on the shorter term time frame charts. Well, I've got a 30-minute time frame chart out here. That's the shortest that I've got on this screen. And here we've got a couple different A to B equals CD patterns to the downside. I do not have any kind of bottoming signal. I don't have a TD9 count bottom. I don't have an A to B equals CD bottom out there. What we do have, though, is price testing a prior level of swing point. So it hasn't gotten through those areas. The first one that we're looking at is from 10:30 in the morning back on December 24th. And what we actually have on that one is a test and rejection of that swing point. The other swing point that you'd be looking at from a 30-minute time frame, if you're a real intraday trader, would be that 11:30 swing point, 11:30 in the morning on December 23rd. And right now we are testing and rejecting that as well. So that would be the only bottom pattern, which is a test of a swing point area and a rejection of that. And that most certainly can be a bottom. If we look at the 60-minute time frame chart here for Goldilocks, what we've got is gold is pulled back at a Rhodes Momentum Indicator top. It had two of them. That didn't mean that it was a super special top or anything like that. It just meant that it was a top. Price has now found support without a bottom pattern, but it can be simply a bottom pattern just to pull back to support. So 26.50 is a level for you to watch if you are trading gold on an intraday basis out there. So Hector, that is a partial review of gold. You had wanted me to go over to my other screens, which I had to change stuff up. I didn't get it completed because the system kind of went kaput while I was doing that. It's back up and running right now. But basically what Hector and Patty were asking me to do was to take a look at gold priced in the major currencies out there. And that's going to be, where's that chart? Where'd Stevie have that chart? Okay, must be further out. Give me a moment. We'll find it. I will find it. I must have passed it. Stevie's eyes. S&P gold, U.S. dollar, no, gold price in major currencies. Here we go. So I don't think I have it set yet for the yuan. Let me actually do that. I know that I don't. Let me see if I can get back there, Chinese yuan. And this takes a look at how gold is trading in each of the major currencies. I've just got to update it for the correct contract out there, the 2025 contract. Here, if you take a look at the upper left, you can see inside of U.S. dollars, we're trading lower. We're trading lower in terms of euros. We're trading lower in terms of the Japanese yen, in Great British pound, in the Canadian loonie out there, in the Corona, and inside of the Chinese yuan, we're also trading lower. I haven't completed that for the Aussie. So the pressure that we see inside of gold right now is saying lower. The question becomes, do those area of support that we were looking at hold in terms of U.S. dollar? In terms of U.S. dollars, and then we see a bit of a rally out there. If we go down to, I don't have another shorter term time frame chart. Let's just take a look. Let me take this 30-minute time frame chart. Let's go ahead and change that time frame. The oscillator and change line here is going to be incorrect, meaning it's going to be for the 30-minute time frame. That's why it's got all those squiggly levels out there. So now we get to a 15-minute time frame. You've got a TD9 count bottom pattern that will go ahead and form in 13 minutes. That is, as long as price is able to close below, so you don't want too much of a rally if you're looking for an intraday bottom out there. If the price closes below 26.3340 at 10 a.m., we're 26.31 right now, that would be a TD9 count bottom pattern for that 15-minute time frame. I'm just going to reset this back to 30, and then we're going to go ahead and move on out there. So Hector and Patty, that's going on with regard to gold and the U.S. dollar index. And as always, thanks much for taking the time to write in. I'm going to close this set of charts down as well, just free up some resources out there. And now we're going to go take a look at a request, one from Dan. I don't really think I have much in the way of requests for individual stocks or anything like that. Give me a moment here. Come on, Stevie. I didn't have anything open. There we go. Okay, so I'm not sure what chart is going to show up here, but that's not what what Dan was looking for. This is going to be Newmont Mining. I might as well keep Newmont Mining up on the screen just for a moment, and then we'll go take a look at BBAI out here. So we take a look at Newmont Mining. Newmont Mining, which is the largest holding inside of the GDX, formed a nice Rhodes Momentum Indicator bottom on December 20th for its daily time frame. You can see on the weekly time frame today, it's going to go ahead and complete a TD9 count bottom pattern. All this suggests a rally. Now, in the case of Newmont Mining, it has formed a slightly bullish structured profile. It's got resistance up at the 39.17 area out there. You're still seeing the 9 panel. Thank you. Give me a moment here. We're going to switch over to the white charts out there. Now we've got the white charts up on our screen. And here you can see you've got Newmont Mining, the Rhodes Momentum Indicator bottom on the trading session of, thank you, Al, December 20th. The TD9 count bottom pattern on the weekly time frame. The monthly is the one that suggests caution out there. It's not down at support. It's below its red oscillator change line. But what we should see here is Newmont Mining should rally. It should at least rally in the top of its profile, 39.17. That's even with, look, you got gold that's down quite a bit, trading right now, what, about 26.30 or so. And you've got Newmont Mining that did just simply simply gapped to the downside, found support at South Southern Change Line, found support at the bottom of his profile, likely to rally from here. But what Dan was looking for us to take a look at was BBAI. So let's pull those charts up on our screen out here, see what they are communicating to you and I. Give me a moment. Now we take a look at BBAI. We're trading at 457 on a daily basis. We're looking at the daily chart first. We're trading above the top of its profile, closed above it yesterday, 377. A second close above that tells us about a profile change in trend. We're trading above its green oscillator and change line. All those are bullish conditions. Now, the only sign of caution that I see out here is the wave number 7 action out there. So we are in wave number 7. That's likely to be confirmed. What that could be signaling to us, Dan, is that price would be getting ready to pull back towards that 377 level out here. Weekly time frame looks bullish as can be. The same thing on the monthly. We come back from this break. We'll finish taking a look at BBAI for Dan inside the Tiger's Den.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Steve Rhodes is filling in for Tommy O'Brien this morning. Hey, the next hour we're going to replay Jacob's session from last evening. Then I'll be back with you at 11 a.m. You get a double whammy of Stevie today, if you'd like. We were taking a look at BBA for Dan inside the Tiger's Den, noticing that wave number 7 top, suggesting that we might see a short-term pullback. But that's probably about it. If we take a look at the weekly chart that is traded above all kinds of resistance and inside its swing point from back in March 8th, that had 198 million shares on a weekly basis, we're trading into it with 235. When you close inside a swing point with volume, odds favor that you're going to go test that high being 480. On the monthly time frame chart, we're getting ready to close out the month next week. That swing point at 505 million, you're into it with 1 billion shares. So you're going to go at least test that top, maybe take that out. We've had 3-4 consecutive sessions to the upside, so a session or two to the downside would just simply be logical out there. So looks like BBA wants to continue to move higher, Dan. Apple trading down a bit this morning, 264. What is it doing? Well, it could be forming a Rhodes Momentum Indicator top. Now, it negated its TD9 count top and yesterday, but now it could be setting up, depending on the candle formation, a three-river evening star. The level to be watching inside of Apple, and Apple had moved higher for 5 consecutive sessions, so to get a little bit of a break, a little bit of a timeout would make sense. But the first level of support inside of Apple on its daily time frame is the oscillator and change line. We're almost to it. That's at 255.82-ish. That's what you want to be looking at. The weekly time frame chart, no topping pattern at all. You need a bearish reversal candle. Not likely to get that today. That says it wants to continue to move higher. We are in bar number 8 on the monthly time frame out there. So it says you could get a top at the end of this month. Maybe we're setting up for an early move to the downside in January, which is a normal pattern out there. But right now, nothing broken just yet inside of Apple. Watch that 255.83 level. If we do close below that, we likely see a further move lower, and 251.77 could or would be its price target. Folks, great to be with you. Stay tuned. As I mentioned, we'll replay Jacob's show from last evening. I'll be back with you at 11 a.m. sharp. We'll get back to the normal Trader's Edge show, where hopefully we have lots of requests out there. Have a fantastic Friday, folks. We'll see you soon.